The following production is presented by League Info Site and the Credit Union Broadcast Experience, QTV.
Hi, I'm Sean Wilbert with Cube TV. Thank you for joining me for this edition of the CU Compliance Connection. We're going to review the National Credit Union Administration's amendment to the Credit Union Service Organization, or CUSO regulation. The NCUA amended the CUSO regulation to increase transparency and address safety and soundness concerns for the credit union industry. The final rule expands the requirements that apply to federally insured state-chartered credit unions to address accounting, financial statement, and audit requirements. The final rule also includes limits on the ability of less than adequately capitalized federally insured and state-chartered credit unions to recapitalize their CUSOs. In addition, it adds several new requirements that apply to both federal credit unions and federally insured state credit unions. Specifically, all CUSOs are required to provide basic profile information to the NCUA and the appropriate state supervisory authority on an annual basis. Prior to investing in a CUSO, credit unions must obtain written legal advice as to whether the CUSO is established in a manner that will limit potential exposure to the credit union to no more than the loss of the funds invested in or loaned to the CUSO. In addition, if a credit union invests in or makes a loan to a CUSO, and that CUSO plans to change its structure, the credit union must also obtain prior written legal advice that the CUSO will remain established in a manner that will limit potential exposure of the credit union to no more than the loss of the funds invested in or loaned to that CUSO. A federally insured credit union must also obtain a written agreement from a CUSO before investing in or lending to the CUSO, and that agreement states that the CUSO will account for all of its transactions in accordance with GAAP, prepare quarterly financial statements, and obtain an annual financial statement audit by a licensed certified public accountant in accordance with generally accepted auditing standards. Provide the NCUA, its representatives, and state supervisory authorities to any books and records of the CUSO and the ability to review the CUSO's internal controls as it deems necessary. And annually submit a report directly to the NCUA and the appropriate state supervisory authority, and the report must contain basic registration information, including the CUSO's legal name, tax identification number, address, telephone number, website, primary point of contact, services offered, the names and charters of the credit unions investing in or lending to and receiving services from the CUSO, and investor and/or subsidiary CUSOs. If a CUSO is involved in what the NCUA deems high risk or complex activities, more stringent requirements are imposed on the CUSO. Complex or high-risk activities include pre-approved CUSO activities and services related to credit and lending information technology and custody or safekeeping and investment management services for credit unions. In addition to the general reporting requirements, CUSOs engaged in complex or high-risk activities must also report information specific to each credit union investing in, lending to, or receiving services from the CUSO. These requirements include a list of services provided to each credit union, the investment amount, loan amount, or level of activity of each credit union, the CUSO's most recent year-end audited financial statements, and for CUSOs engaged in credit and lending services, the total dollar amount and number of loans outstanding, and the total number and dollar amount of loans granted year to date. The information must be provided by loan type for each type of loan originated or serviced by the CUSO. Federal credit unions and federally insured credit unions may only invest in a loan to a CUSO which has a subsidiary CUSO if the subsidiary CUSO complies with all the applicable state laws and rules regarding CUSOs and all current and amended requirements to the CUSO regulation. The NCUA regulation defines a subsidiary CUSO as any entity in which a CUSO has an ownership interest of any amount, if that entity is engaged primarily in providing products or services to the credit unions or its credit union members. A credit union and a CUSO must be operated in a manner that demonstrates to the public the separate corporate existence of the credit union and the CUSO. Good business practice dictates that each must operate so that the respective business transactions, accounts, and records are not intermingled. Each observes the formalities of its separate corporate procedures. Each is adequately financed as a separate unit in light of the normal obligations reasonably foreseeable in a business of its size and character. And each is held out to the public as a separate enterprise. The federally insured credit union does not dominate the CUSO to the extent that the CUSO is treated as a department of the credit union. And unless the credit union has guaranteed a loan obtained by the CUSO, all borrowings by the CUSO indicate that the federally insured credit union is not liable. If a federal credit union is less than adequately capitalized, or would be rendered less than adequately capitalized by the recapitalization of the CUSO, they must obtain prior written approval from the appropriate NCUA regional office before investing in the CUSO. This rule is effective June 30th, 2014. CUSOs will begin submitting reports to the NCUA under the new requirements when the reporting system is fully operational, which will be by December 31st, 2015. Thank you for joining me at the CU Compliance Connection, and stay tuned for future broadcasts on issues that affect your credit union. We're here to help you at the CU Compliance Connection by InfoSite, only on Cube TV.
Thanks for watching the #1 compliance program for the credit union community. Stay tuned.